Hello guys, this is Randall with BitRaged. This is the weekly Forex market breakdown. I'll be looking at Euro-Dollar, the US dollar index, the DXY, and some pairs I'll be looking at for the week ahead and what I expect them to do. Just a couple things before we get started here. For those of you who've been waiting for the drop of the Rage entry and the Beast Mode Management to the course, that is coming very soon. I was expecting to get it out sooner, so I am a little bit behind on that. We're just working on finishing up on a few episodes, and then that will be dropped to you very shortly. So this is going to happen very, very soon. Just please be patient with me. It will be coming, and I am very excited about it. Once we drop that, I am planning on adding new course content, and based on some of your feedback, I have some ideas I think that will be powerful to you guys, just helping you to refine the process and also become more focused. I'm also working on a video for motivation, psychology, that kind of idea. I'm just trying to get the footage and the clips and stuff for it, but that is something I also want to drop for you guys. So a few things in the works, some things we're looking at. So if you aren't a member of the course yet, I encourage you to click the link below and join. It is currently a one-time fee. It will not always be a one-time fee, and when we change, the fee structure will change to monthly. So now's the time to get in. It'll be a one-time fee. If you get in, you will have lifetime access to the course, and any updates we add to the course will be completely free. So let's jump into the charts here. For the dollar, the DXY, we're seeing this impulsive movement on the daily, and it's at a double bottom. Let me get rid of this so you can see better. It's a double bottom area, basically a triple bottom area, and we're seeing that rejection. So that's very interesting on the daily. Now, if you drop it down to the hourly, or the 4 hour rather, so what we had was this corrective movement up, and then it moved out correctively. So because of this, we were looking at, if you remember the Slack, I posted a chart that I was looking at. I was expecting this to break to the upside. What's important to understand is that it did break to the upside, but what happened afterwards? That's what's important. See, a lot of people, they look simply at breaks, they look at support and resistance, they look at trend lines, and they're just like, oh, it broke. Well, what happened after it broke? That's what's most important. And if you really focus on that, it adds a lot of information. So we broke the high, and we immediately retraced. Very important. The market could not hold the momentum. And when you see that, then you know that this pattern, the larger pattern, is most likely playing out, not this pattern, because this pattern's already been fulfilled. Okay? It lost momentum and it retraced. So now we're expecting this to break the upside, not to break the downside. Now just think about it. What if, instead of this being one candle, what if it had done this? You would have seen that totally different. You'd be like, oh yeah, more corrective movement up. It's going to fulfill the pattern and drop. But because it's one candle that retraces, sometimes it puts people off. So that's what we were looking at. And it does break to the downside. But again, what happens after it breaks to the downside? So we break this area here, and we immediately turn very corrective. And when we see that, we should know that the possibility is this to move the upside. Basically what's going on is the market is trying to figure out where it wants to go. Let's look at the hourly. So on the hourly here, just a couple points to keep in mind. I'm going to show you this is what you should have been looking at. You might have seen this like that, more like a broadening wedge, because it's hard to know how this top is developing. But I think the bottom would have been very clear for you. That's a 1, 2, third touch. You got this Morningstar formation, this gap, and then this candle. Now, it is important to know that a lot of times that gap will fill, or at least 75%. So if you were to enter, you would have wanted to keep this at around 20 pips below, just in case it gaps down again. But that would be running 1.5% if you were in that type of a trade. If it was on the euro dollar, it would be like 2%. So a couple things we want to keep in mind. So corrective movement broke impulsively, and currently we are impulsing. So if this continues, we might be looking at this to move up a little bit farther. There's a couple things we do want to keep in mind. We are moving correctively, breaking correctively, breaking correctively. So this could be just another one of those patterns. We just got to watch and play it out. Let's look at the euro dollar. Okay, so the euro dollar, it's the same general idea. We do have that clear break. On the euro dollar, you do have 1, 2, and third touch. So it's a clearer break in my opinion on euro dollar. And you have the same double top pattern. So this was a trade you could have entered in on. It's would have been a decent trade. Triple top. It does have some of the arcing nature, probably not the perfect style, but somewhat arcing nature, and then you could enter on that reject candle. That's how I would have entered. But the spreads would have been, the spreads would have been a little bit bigger than I like to deal with. So that's why I didn't enter, but it depends on your style if that fits your style. But for the week ahead, what I'd be looking at is to see how we interact with this area here. If we move down, if we get a flag, I will be taking a flag. But what happens when we get here is what matters to me. Are we going to get that rejection? Or is it possible that we start to move a little bit correctively down toward this area? And if we start to move correctively, then we know it's probably going to move back up. So that's just what we want to keep in mind. The momentum is starting to come in, and it is a Monday, which is slower. So as we get to the middle of the week, we might see this just shoot down. It's hard to say at this point, but this pattern is likely to complete. So I would be looking at these areas as possible reversal areas if it's going to reverse. Okay, so this is British pound dollar on the daily. Now, if you were to look at what we have in this pattern right now, what would it tell you? Just the clean price action without anything else. We have a very impulsive movement up. It moves down and it moves back up. And now we're getting that rejection. A couple important things to keep in mind. We are getting a rejection, a move to the downside. So we want to keep that in mind. But this is overall very corrective, and it gives more of a feeling of a larger flag or a larger corrective movement, which still could break to the upside. We haven't broken the high yet, and every time we break to the low, we do get rejected. So it is appearing like there is a possibility that this is just going to form a flag to continue up. Obviously, there will be some correlation to the DXY, so we want to keep that in mind. If we drop this down to the hourly, there's a couple things I want you to keep in mind. So this is what I was looking at as a corrective area, and you'll notice that I'm doing this to show you guys you don't want to trade within these areas, okay? And it's very helpful in my book to see this and say, okay, as long as it ranges within this, I'm not going to trade. Now, we did get that breakout. We did break out, so we can get rid of these now. And what I want to see now is, are we going to continue, form a flag, and continue down? Or are we going to start to lose momentum and then get a reversal? So that's what I'm looking at for this pair. We are seeing a little bit of impulse movement, but it's not too convincing to me yet. So I do want to see how this continues as the week progresses here over Tuesday and Wednesday. Should be interesting. It is overall been very sloppy, very wicky, very corrective. So when it goes, it is going to go. And we're going to see some big movements on British pound dollar. So just keep that in mind. All right, so for Aussie Kiwi, I want to look at this, and then I want to look at the bigger picture for you. So we are seeing impulsive movement, and it's very decent impulsive movement up right now. We are starting to see a red candle, maybe slowing down a little bit. What I want to see is I want to see a nice tight flag. And if we see that, I would love to get in on one of these New Zealand pairs. There's quite a few Kiwi pairs right now that are lining up like this. It's really Kiwi weakness. And so that's something to keep in mind. On the 4 hour, we are in a very corrective area. So we want to keep that in mind. I'm seeing this as more of a broadening wedge pattern. You can call it a triangle pattern. I don't really care. But that's what I'm looking at right now. We are getting this move up, so we might double top here, or we might complete the actual pattern. If we get a rejection here, or at a double top area, I would definitely be looking at that for a sell. I think that would make a nice sell. Keep in mind that we could move a little higher to double top here, which actually would probably correspond with this trend line or that trend line from the past. Just a couple areas to keep in mind. You're going to want to find good confluence for a rejection on Aussie Kiwi because it does move extremely corrective and you can get caught in and caught out, and you don't want to do that. So on the hourly, very corrective. We are seeing a very impulsive movement on the hourly to the upside, so we just want to see if we get some rejection at that top area. But I would be willing to buy a flag if we get a flag soon. I'd be totally willing to buy that unless one of the other Kiwi pairs lines up better. Alright, so for Kiwi Cad, this is another one where we have that double top and a clear rejection on the daily pattern. So it's basically appearing like this impulse is continuing. This was just impulse correction, impulse larger correction. If that's the case and this fulfills, we might be looking at some very decent impulsive movement to the downside. And you can see in the past that this type of stuff happens a lot where you have these bigger corrections. And they don't always move down from there, but you'll get a clear indication if they don't. For instance, with this pattern, it moves up, but it breaks that low first. So it gives a really clear indication that the momentum is slowed down. So this is what we're looking at for Kiwi Cad on the hourly. And I think this is actually a very nice pattern overall. This is a double top from the past. We didn't quite make it, but we came very close. Now, you might not have taken that because we didn't quite make it, and that's fine. You would have seen that, but it does have some confluence here because you do have that arcing nature, and you do have that nice rejection, and you could have taken that reject candle. Now, had you done that, there's a couple things you'd want to keep in mind. First of all, it would be a bigger stop, around 30 pips. You would want to keep that wick in. You'd be running 2%, so it'd be a decent trade, but it would have moved it into profit, then back into a loss before it moved down. Can you take that kind of emotion? That's the issue. A lot of people would have moved this to break even, or maybe you would have taken 0.5% or something. If you're going to take a trade like this, you got to keep it open until you actually get a break of the pattern, which would be breaking down through here. And once you did that, then you could move it to break even because a move back up would invalidate it. But as long as it stands like this, this is a clear ascending corrective movement. Until that breaks, you do not want to be moving your stop. So you want to be careful. Now, you might not have taken that trade because that'd be a little more aggressive, but you should have then taken this if you were looking at the pattern. You should have taken this one if you'd been looking at this, because it's a move back up, and it's not quite double top here, but it does double top that area, breaks it, and you get that retrace. Now, for this, you could bring it down to around 20 pips, but if we move back up, you would have got taken out. So you want to use a little bit of discretion there on how you want to manage it, but that would have been a nice trade as well. But I love these patterns on the Kiwi pairs. They just work really well on Kiwi. And this one's, I think, is a nice ascending. I did cut the wick, and the reason why I cut it is because until this wick, that's what you would be looking at. So then people would move it like this, and that doesn't really mean anything, does it? So rather, I like to have it like this. It's a clear parallel channel, and I see that as a false breakout. I think it makes more sense that way. Now, had this continued to move up, then you'd want to leave it like that. But it didn't. So this is what I'm looking at. That's what the pattern, that's what fulfilled. So for Kiwi Cad, we're just looking to see if we can get a flag, and then we can enter and follow this down, because it does have a decent amount of movement left in here, I think. So like I said, Kiwi is losing some value, and so that is why we're seeing these weaknesses. All right, so this is Kiwi Dollar, and I think this is a nice one because you have the Kiwi weakness, and you also have the possibility for dollar strength. So if we do get the dollar strength, it couples with the Kiwi weakness, you could see very nice impulsive movements on this pair. It's something to keep in mind. Now, this is, I think, a good example too, because you'll notice here we had what we were looking at. They'd say, okay, that's a double top, but we didn't quite make it to that area for here. So as I've mentioned a number of times, when that happens, it's always possible we move down and then move back up, break it, catch people on the wrong side, and then we finish it out. So looking like a triple top, that arcing nature, we do seem to be getting good rejection on the daily. So that's something to keep in mind. Looking for a sell on Kiwi Dollar. Okay, so for Kiwi Dollar, this is again this similar pattern that we're looking at with the CAD. I think almost clear. I almost like this one a little bit better, although, you know, it's a preference. It does have that arcing nature, although it might not be as clear to some of you, but very clear. 1, 2, 3. Very nice rejection. I think some people get caught off by how big the candles are, but don't worry about that. You could have got in that with about a 25 pip, and that's a 2.3% trade as it's running. We are at the beginning of the correction, and we are starting to slow down. So we could be forming a correction here, or we might reject, or we could just start moving correctively. But very impulsive movement, so I'll be looking at this pair to see if we do get a flag to possibly continue. But I really like how this formed and the opportunity. So if you're going to look at Kiwi pairs, look for this style pattern. When you see the impulse, and then it just moves very correctively ascending, then look in the past for those double tops. If it breaks it or hits it, they can be very nice on these pairs. So it's just something you're really going to want to watch. Because Kiwi can move very correctively, you know, this is an entry you can get on a Kiwi pair that actually works out very well. All right, so this is Euro Kiwi. I think this is my least favorite Kiwi pair that I'm looking at for the week ahead. But I do have it just because, you know, if the other ones don't work out, maybe this one will. But you'll notice we start to move up. But as we're approaching this high, we're losing momentum. We start to move correctively. Now, we do move out impulsively. But now we're approaching this high, and we might be seeing a rejection. You know, the hour just started, so we can't really judge it yet. But overall, I don't like how it's moving. So if it was to form a flag here, I would consider it. But given the choice between this pair and Kiwi Cad or Kiwi Dollar, I would take those over this any time based on the way it is forming right now. I just don't like how it has been forming. So doesn't mean it can't work out, and there are some possibilities for an entry on this. It's just not something that I'm looking at as a high probability trade. What I'm looking at as a possibility, I think it's possible that we do something like that, and then maybe we get a rejection from this triple top area. I think that is possible. I don't know. I just think that lines up with how Kiwi is moving with the other pairs. I think it fits a pattern. I think it makes sense. Doesn't mean we can't move up and break that and continue. It could happen, but I don't think that's most probable. So that's possible. That's what I'd be looking at for the week ahead for this pair. Now, dollar yen, a little bit surprising here. It starts off the week moving fairly impulsively. So if this continues into the middle of the week, it might give us some good entries. There's a couple things that put me off from taking this. Obviously, we're coming into the weekend. There's a couple different things. I didn't end up taking that entry. But I can understand if you did, why you did. Because very clear descending. You could have taken a break on this. It would have been a very good trade, actually. Because you could take a break and you would get in with, I would get in with just about 15 pip stop, and you'd be running 2.5% on that. So I can understand why you would take that. There's a couple things that put me off. It just wasn't a trade that I was looking to take. The way it came up was not as impulsive as I like. Too much rejection wicks from both sides. Very impulsive movement to the bottom, and then very corrective here. Indecision, I guess I would say. So it does work out, just not one that I was looking to take. But that being said, if this forms into a tight flag, I'm totally going to take that. I would love to take that. But I do want to see how it forms because we are close to this double top area, and it's possible that we just start moving correctively or we reverse. If you look at the daily and you look at it without anything on the chart, I think it's fairly clear that this is an ascending corrective movement, and I think it makes sense to see this break to the downside eventually. What's also important to understand though is we did double bottom here. It's not as clear as some of the other pairs, but you'll see from the past. And so that move up, maybe a double top here, or to fulfill a pattern, a ascending wedge, is a possibility. So that's something to keep in mind. Right now we are moving fairly impulsively, so if we get the flags, I want to take a buy. I wanted to show you Euro British Pound from last week. If you remember, I was talking about ranging in this area. I had this as a descending channel, and I told you that even if we got that third touch, double bottom or whatever, I would not be interested in taking it. Now, you might look at this and say, yeah, you said that, but look at this. That would have been a beautiful entry. You say, 15 pip stop there. You'd be running 1.85%. Your stop would be protected. There'd be no loss. And it's true. And if that fits your style and you want to take those trades that are a little bit more risky, then that's fine, because some of them will work out. But here's my point. This one worked out. Most of the time they won't. So let's say you set your stop here. So if you say it breaks down, I'm going to get taken out 1.4. 1.4%, okay? Not too bad. 1.4%, decent. What about the next 10 times? What if 6 out of those 10 times you're taking a loss? Because look at the rest of this. Crap, right? So it does have that overall arcing nature. It does double bottom. It does fit the pattern. I can understand why you'd want to take this. And again, if it fits your plan, if you backtest this, you say, I'm going to take those style entries, that's fine. But it's important to see what happens. It moves up and then it automatically moves correctively. Why? Because we're still in this range area. All we are doing is ranging. You're going to see some impulsive movement here, right? There is some. It does happen. It's going to happen. The problem is you're going to get caught in and out. So, again, I'm just telling you based on my experience how I would handle these things. You could look at something like that. More likely it's going to form a bigger ascending. But I'm not looking at this pair to trade until it breaks out of this area. So that's just me. Okay, so Aussie dollar, this is another one that looks like it has some potential here. We want to see how it moves into the week ahead, but it isn't overly clear here. But this is the impulse down, and this is the correction, and it is continuing. So this is the continuing impulsive movement. A couple things to keep in mind. We are at that double bottom area, and we are seeing it slow down. Again, the hourly just started, so we don't know that will continue or what. What I would like to see is another impulsive leg and a flag, and I would love to get in on that. But we have to see if that is what happens. We are getting the impulsive movement though starting out, so that is nice, and that is something I will look at this pair as the week continues to see how it moves. If you look at this on the daily, it's very interesting because we are actually very close to this trend line and we're rejecting. Now, it's a descending trend line. It's a descending channel, so we are expecting this to break to the upside. But that being said, we also are forming what appears to be possibly a larger flag out of a very impulsive daily. So very impulsive turns into corrective. So to see this break down, it may just be that this is impulse correction flag to break down. We get that next touch and then it moves up. There's nothing that says that can't happen. We have a lot of time to get there, and we might double bottom here or here or here. So we'd keep an eye on those areas as we move down. But it is looking like the possibility that we are going to get that downward movement. So we want to keep that in mind, and we want to take a look as it moves, see if we get some entries, some flag entries or whatever. So that's what I'm looking at for the week ahead. Obviously, we are seeing a lot of corrective movement on a lot of pairs still, and so I'd just be careful. A lot of the British pound pairs are moving very correctively. You're going to see some impulsive movement, especially with the Kiwi weakness and with the dollar strength. So there might be some opportunities there. I would say this, if you're struggling to be a consistent trader, you might want to eliminate the British pound pairs, except for British pound dollar. I'd keep that one, but I would maybe get rid of the other ones. For instance, generally speaking, if EURUCAD and British CAD are both lining up, EURUCAD is generally going to be a better entry. It's not always true. Generally speaking, it is true. But also, if you're struggling with consistency, sometimes it's better to narrow the pairs you're looking at down to 3 to 7 or 3 to 5 and focus on them. You tend to not miss as much, and you also can spend more time back testing those. And once you finish back testing those, you can branch out and work on other ones. But you really want to master trading, and to master it, you need to really focus on understanding each pair, because each pair does have its own nuances. So once you figure that out and you really master it, then when you start to trade these pairs, you start to remember things. Like the EURUCAD moves like this, and the Kiwi pairs, they'll move a little bit like this. And once you start to understand those nuances, it adds so much to your trading. The little tweaks that you can make, understanding like the Kiwi pairs that often will make, and CAD can do it too sometimes, those very steep ascending patterns right out of an impulse that double top. I mean, those entries can work out really amazing. So just understanding the opportunities and taking advantage of them. But it's not going to happen until you put the time in. So if you haven't been putting in the time, you need to really focus on doing that. It's a new month, so it's a new start, and I encourage you really put in the effort and the time. Really focus and make this your best month. I don't care what the percentage is when you end. It doesn't matter. What matters is how much effort have you put in. Are you learning and growing? Are you getting better at understanding the charts? That's what matters, and that's what's going to make you into a successful trader. Again, if you're new to trading, if you're new to BitRage, I encourage you to click the link in the description, check out the course. It's a really amazing opportunity for you to learn how to trade. And if you have any questions, just drop them in the comments below. If you're not subscribed, please hit that subscribe button. We'd love to hear from you, hear your thoughts. If there are pairs you want me to look at, drop them in the comments. I'm not going to look at every pair, and I do focus on the pairs that I see as more potential. That doesn't mean that there won't be pairs that will line up during the week. For instance, come Wednesday, we might start having some movement on pairs I wasn't looking at that are now starting to line up for moves. So I would encourage you to still just keep watching the market and seeing how it is developing as the week progresses. We are expecting the momentum to start picking up as we get into Tuesday and Wednesday, and the opportunities may line up. And if they don't, that's fine. Even if we don't get a trade this week, that is fine. We will get trades this month, and it's better to get quality over quantity. So don't just feel like you have to take trades if they're not ready yet. Just wait and be patient. Again, looking forward to dropping some new content in the course for you guys. Looking forward to seeing you guys dig into the Rage entry as we release that very shortly. Thanks so much for watching, and as always, guys, have a great week.